jet lagged because over the last few days I've been on airplanes circling the globe. When you have a project that's in New Zealand, it's quite a long distance away, and so I'm happy to be here in Toronto this morning. I'm going to take you through a PowerPoint presentation that I'd love to spend about an hour with you on, but unfortunately with 10 minutes, what I've done is we've printed off a number of hard copies that are available at our table in the foyer here, and I'm going to go through and highlight just a number of slides that I think are important. New Zealand Energy is a new company that is really 2 years old now. This is a company that has focused on New Zealand and has really accelerated in quite a short period of time. We have amassed an acreage position of over 2 million acres in the country and have assembled a very strong technical team of Canadians and New Zealanders that I'll tell you about in a moment. We have our forward-looking statements that, for your study. So we're about production, exploration, and growth. We became a producer in December of 2011, and our exploration activities have been quite comprehensive. We're quite poised for growth, and yesterday some of you may have seen an announcement that we made of a bought deal financing that was quite hotly sought after, where if we are fortunate enough to close on the principal amount plus our over allotment, we would add to our treasury over $60 million at $3 a share. In terms of our opportunity, currently we have our first well, Copper Moki-1, which since its production date commencement in December 10th, we've averaged 500 barrels a day of oil produced and over 800 MCF a day of gas. Our gas is quite liquid rich in this area, approximately 60 barrels of liquids per million cubic feet. Then just recently, we've now commenced production testing of our second well from the same pad, Copper Moki-2, and we were quite fortunate in the first 5 days there to see over 1,000 barrels a day of oil being produced and over 800 MCF of gas. Now, the oil in the region is very valuable oil. It's oil where we get a premium to Brent. So we're not talking about WTI, we're talking about Brent. And the reason that we get a premium is because there is a paraffin component. The paraffin component, while we have to handle it a little bit more by keeping the oil warm till it gets to the ultimate recipient, the paraffin is a value add for us because our end purchaser currently is Shell, and they use the paraffin to stabilize their condensate. But again, a premium to Brent is what we're achieving at this time. Our netbacks are quite high. We're certainly in the top tier of netbacks, where we're achieving in excess of $90 of netbacks per barrel. Moving on, in terms of our 2011 achievements, really what we've done is in 2011, again, we've assembled our land package, and then we had hired the best technical team in the country to come in and work with us. And this is a group that had been together for 26 years and was very, very prominent in a number of the major oil and gas operations. And we got along so well with them, as they say, we bought the company. And so they took an equity stake in our business, and all of a sudden we had a very strong in-country technical team of geologists, geophysicists, technical experts, land people, etc. Very important for us to establish that footprint immediately in our head office in Wellington. We also layered in very significant management in our president, Bruce McIntyre, and others from the Calgary, Western Canadian Sedimentary Basin region. So we brought in expertise in not only conventional but unconventional oil and gas. We then developed a geological model which was quite unique, and we've now been executing on that model, and that's been evidenced in our first two discovery wells and the production that we've got to date. In terms of our production and cash flow, our first well is producing approximately $1.3 million net to us on a monthly basis, and we're expecting substantially higher numbers when we put Copper Moki-2, our second well, into long-term production. Our plan for 2012, and this year we're drilling a total of 10 wells. So there's 4 wells at Copper Moki that are being drilled from the same pad. 2 are currently in place producing. The third one is well underway now, so we hope to have results in probably the third week of March, and then immediately thereafter we'll drill our 4th well from, again, the same pad. We're also in the process of organizing a gas pipeline from our pad to about a 3.5-kilometer tie, and we're considering an oil pipeline as well. In terms of an exit rate, we've forecasted an exit rate of production of 3,000 BOE exiting 2012, and given the success that we've had with the first 2 wells, we're hopeful that we can exceed that. Just our quick corporate profile. This will change quite dramatically with the closing of the financing that we announced yesterday. As I say, it was a bought deal that was originally announced at $35 million, and there was such an overwhelming response that we scaled it up to $55 million with an over-allotment. So our common shares outstanding will move from 100 million to, on a successful closing, will move from 100 million to 122 million. Fully diluted, that would be approximately 128 million. Our market capitalization, we traded up from our bought deal price of $3 yesterday to $3.45. And so our market capitalization currently is about $350 million. On the success of this financing, our working capital would move up to just over $70 million. The insider ownership would slightly decline to about 33%, and the other items are pretty much the same. Our 52-week high is a little higher, it's $3.69, and we are trading about 500,000 shares a day. Our management team is made up of very experienced resource professionals. We've got a very strong board of directors, and I'll just say under the Kiwi flag is the team that we acquired. The chief executive officer and principal owner of the oil and gas group in New Zealand is now our chief operating officer, Ian Brown, and the people that came along with him are hided below that. In the PowerPoint presentation, if you're looking at a hard copy, there's substantial bios of all management and technical people at the end. One of the most important things that came along with the acquisition of our technical team was the acquisition of a proprietary seismic database for the whole country. Now, seismic data falls into the public domain after a 5-year period, but our team over a 20-year period had assembled all publicly available seismic data and then had put it on our workstations and reprocessed it and reinterpreted it. So we use 3D seismic as our tool of choice, but we can see what all of our neighbors, we can see what Tag Oil is doing and others, as well as we can look at new opportunities in terms of acquisitions we'd like to make. Our assets, here's the North Island of New Zealand here. On the left side, or the west side of the North Island, what you'll see is the Taranaki Basin, and this is the area of conventional oil and gas. We're the largest exploration permit holder in the region, and this is where our production is based. On the east coast, what you're seeing is an area of substantial unconventional as well as conventional opportunity. There are 2 thick shale packages that are stacked in this region that are producing enormous oil and gas or original oil in place type numbers. On the Taranaki Basin, we've got approximately 177,000 acres. And on the east coast, we've got over 1.8 million acres, which include a 1 million acre permit that we've applied for and that is in the final stages of the permitting process now. All right, there's a physical picture of tanker trucks taking 200 barrels each up to the Shell tanker farm, which is about 45 kilometers from our facility. Quick overview of the Taranaki Basin. What you can see here is the red are oil or our gas fields and the green are oil fields. And we're clearly in the heart of the producing fairway, and there are clear trends that come across our property if we were to superimpose the seismic data and other technical data we have. Netbacks, as we mentioned, we have to put a new slide in because Brent pricing has increased beyond our capacity here, and so our netbacks are certainly above $90. The principal driver that I want to leave you with is the upside that we've got here. Basically, we use 3D seismic to identify additional drill-ready prospects and actual number of drill locations. Currently in our inventory on 3D seismic, we've got upwards of 28 well locations. In a second area that we've got 2D seismic on that we're doing 100 square kilometers of 3D seismic on, we've got upwards of another 50 locations, which would bring our drill inventory up to 40 to 80 locations on the high side. We're looking at each one of these wells having an EUR, or a potential recoverable resource, of between 500,000 and 1 million barrels. So the scale-up potential here is fantastic. We've forecasted 10 wells for this year, and we're looking at an EBITDA potentially of $46 million. And for 2013, we've scheduled 12 wells currently, which we think could be quite conservative, and we're looking at an EBITDA of just in excess of $90 million. The East Coast is the area that a lot of people have got some attention on, and I'm just going to take you to this slide. The original oil in place numbers are dramatic. Over our ground alone, including our application area, AJM Petroleum Consultants have ascribed 22.3 billion barrels of original oil in place. And even if you distill that down to a 2% recovery rate, that's over 478 million barrels of oil. We're adjacent to TAG, so TAG Oil has land adjacent to us. We've got approximately a third larger of a land package that TAG has. And of course, TAG's land is where Apache is in the process of a $100 million farm-in. We've completed 3 core holes and have excellent data in that area now, and Apache is commencing 4 wells in April. So we think this is going to be a very exciting area, and we're looking forward to drilling our first a real well hopefully soon. 2012 is all about building on value. We've demonstrated repeatability with our Copper Moki-1 and now Copper Moki-2 wells. We've got Copper Moki-3 and Copper Moki-4 happening right now, so there's going to be a very immediate news. And we've got a large drill inventory of 3D seismic identified prospects. We've completed, or we've announced our financing. We haven't completed it yet, but expecting that to be around the 21st of March. And with those dollars, that will really allow us to accelerate our program and achieve our objectives. The East Coast, that's the big upside. So we think our value is built in on the Taranaki Basin, but on the East Coast, enormous upside, so stay tuned there. Thanks very much for your attention.